Good afternoon and welcome to Markets Today. I'm your host, Mbitha Mwema. It's an exciting Tuesday. The sun looks nice and bright. Perhaps we might have showers later on in the day, but who's to tell? The weather has been quite erratic, and so are our markets as well. In as far as the Nairobi Securities Exchange is concerned, yesterday the performance was quite lackluster. 351.5 million is the value that was traded yesterday. The banks and Safaricom were the dominant trades over the day, as expected. Today, we are looking at corporate actions and seeing what numbers have actually come through overnight in as far as corporate actions are concerned. We start you off with Longhorn Publishers, a local publishing company. It has announced half-year results for the 6 months ending December 2019. We'll take a recap of that and just explain some of the things or trends that we were able to glimpse from the financials that the company has reported. That aside, budgets. We are now in the process of getting a draft of the finance bill following the budget statement that was released by Treasury last month. Treasury has already engaged with different stakeholders, and we expect them to actually come with a revision to some of the numbers that we have seen later on in the process of the budget making. What needs to happen next? Submissions need to be made to Parliament. The parliamentarians will come back and say, we think these numbers are either too high or too low, they need to be adjusted, and then we'll get into the process of having the finance bill articulate any of the statements that have been incorporated in the budget policy statement. What is new with this statement? Is there anything that you need to pay attention to, either as an investor in this economy, as a producer in this economy, as a consumer in this economy? In other words, will your taxes be affected, and should you expect a better or a worse off year? That's a discussion that we will have later on. And in studio, we have a very interesting guest, an economist, and he works with Genghis Capital. He'll be giving us a lot more. But let me not put the cat out of the bag as yet. I'll tell you about him and about the budget statement later on in the show. On the screen, we do have the financial results that have come out from Longhorn, and you have the top line there. The revenue was up 4 percentage points in the 6 months ended to 31st of December 2019. 725 million shillings is the amount of revenue that this company was able to make. If you go further down, the gross profit, however, was slightly lower at 376 million compared to 426 million in a previous reporting period. Now, what was happening here? The company did allude to the fact that it had to roll out new products. The competency-based curriculum, that means there has to be innovation in the way they're producing their material, and they've had to incur a slightly higher cost, which has affected their cost of sales. When you keep going down, you can see the operating expenses. There was a slight efficiency improvement there. 241 million shillings is what was reported versus 294 million in operating expenses in a similar period last year. Finance cost was more or less flat at 41 million. That is how much the company was paying for. Income taxes also more or less flat at 23 million. That was paid for the 6 months to 31st of December. Total comprehensive income came in again flat at 68.967 million for the period. What is Longhorn about? It's about publishing books that are sold to schools and to educational providers to provide services of education and learning. What does this mean? Curriculum, the competency-based curriculum has actually evolved a change of the material that is dispersed to education providers and consumers in this economy. That said, this company, Longhorn, had actually made some investments in anticipation of this change, and they expect that perhaps their margins might not be as attractive at the current moment, but in the medium term, they do expect a correction once there's a full rollout of the competency-based curriculum, as well as the material to the education providers as well as the education consumers. Any dividend? Nothing to report here, but just good to know what is happening in as far as publication is concerned. That said, the key other thing we will be looking out for this week is on Thursday, BAT, and that is British American Tobacco, the producers of the cigarettes that you largely consume, will be announcing its full year numbers on the day. What should we expect and what is the market expecting? That's a conversation that I hope you can join us to get more of in terms of our show tomorrow. Now let's move over to the budget. Budget. budgets, budgets. Why does it mean anything for you? Why should you pay attention? Well, you always have to pay attention and understand how much is expected to be raised in terms of revenue. Revenue is you and I. What we pay in corporate taxes, what we pay in income taxes, what we pay in value-added taxes, what we will also start paying in terms of our turnover taxes, as well as our presumptive taxes. Anything to do with taxes, that's the key thing that we are looking at. But before we look at the taxes and the expenditure, this budget policy statement was a very interesting read. A lot of pages there, but very insightful if you are trying to understand the mechanics of how the Kenyan economy works. To start us off, we have the economic performance in terms of contribution to GDP. What were the different sectors contributing to the growth of this economy? For the longest, we've always imagined, or rather we've always been dependent on agriculture for the growth of this economy. But this trend, you can see, was slightly different in the last reported numbers at the very end of this chart. You can see services and industry, which are the top lines in the last bar. That is the orange bar as well as the blue bar. Both of this were about 3.8% in terms of contributing to the last growth numbers that we saw. The growth from the agricultural sector was a paltry 0.6%. What do these numbers tell us? They're telling us if you're in the agricultural sector, there's not too much growth opportunities. In fact, there are a couple of risk factors. If you're not dealing with the erratic weather, you're dealing with the onslaught of the locust, which is not a good thing because you're not able to manage it at this point in time. What's the second and most important thing that these numbers are telling us? These numbers are telling us that from 2016 all the way to 2019, the services sector is continuing to see increasing growth on a quarterly basis. What is the services sector? Anything that you're doing on your mobile phone, anything that you're providing, maybe even in terms of services in the financial sector, in the trade and services sector, even in the media sector, anything that is not tangible but you are always providing a service, that is something that is seeing some slight growth over and above what we have been expecting to see. And the agricultural sector may not be the key driver for this economy, at least into the medium term. If you are in the services sector, then you're certainly in the right space. And that's why you need to be able to read this document to understand where are the opportunities. And more importantly, you need to keep tabs on this document once it gets into the final stage to understand if there'll be any taxes that you will be expected to pay. That is the growth contribution. The other thing that we thought would be very interesting from this budget policy statement was the onslaught of inflation. And that's the next slide. Okay, there we have it. So contribution to overall inflation. Overall, the inflation has been coming down over the years and it's at a stable number. But then the question is, what do we expect to see in this financial year? We have had numerous experts in a studio with us here at Markets Today, and the expectation has been more or less stable outlook on inflation. So then why do we bother with this chart? If you look at this chart, it just trends the contribution to overall inflation from January 2019 all through to January 2020. The contribution there, the largest sum that you have, which is food in the green color, shows you that the last reported number, food was 4.3% of the contribution to overall inflation. And then the next thing is you have fuel, which is blue, and you have the core inflation, which is the yellow color there. If you look at the trend, you can see from April of 2019, there was a spike in terms of food's contribution to the overall inflation figure that came down in May, it came down in June, but it has started ticking up in November and December, and it went down in January 20. Now, this is a very important thing to always bear in the back of your mind. We have the onslaught of erratic rains, and we also have the onslaught of locust, both key risk factors to the cost of food. And if there's anything to go by, the cost of tomatoes has become a funny meme because everybody says, I'd rather have tomatoes than anything else because they've all of a sudden become very expensive and very valuable to any household. This inflation line tells us there could be a rise in inflation in the year 2020. If there is a rise in inflation, that means a rise in the cost of the goods that you consume on a day-to-day basis or even on a month-to-month basis. What does that mean for you? You could possibly have less money to pay off your debt or to be even able to save. Your consumption could become more expensive, and that's why you need to pay attention to this line. We move on to the next chart after this. Our graphics team will assist us with that. All right, as we wait for our graphics team. Okay, looks like there's a bit of a slowdown there. We take a quick break and we will be back shortly.